20 questions for a Bali developer in 20 minutes. Everything about the real estate market. The first and most important question, how is profitability calculated? To understand how much income your property will generate for a given period of time, you first need to determine how much revenue it will produce. To do this, you usually need to know what the average daily rate will be, as well as the occupancy rate at which your property will operate. This way, you'll understand what kind of cash flow your property will bring you in terms of gross revenue. However, that's not your actual profitability yet, and now you need to subtract all expenses from that amount. First and foremost, you should deduct all expenses related to attracting clients and making sales from your revenue. Often these are commissions from booking platforms such as Airbnb, Booking.com, and similar services. This commission can range from 18 to 21%. However, if the management company handling your property operates not only with booking platforms, but, for example, like our company, which over 10 years on the Bali market has built up a fairly large base of independent partners and agents, then a significant part of your revenue may come through the agent network. The main advantage of an agent network is, firstly, that they provide you with additional revenue and occupancy, and secondly, sales through this network usually cost somewhat less, about 10% of your revenue, which significantly increases your profitability. After we subtract the sales commission from the total revenue, we still need to subtract two important factors. The first is the management company's commission, which they charge for providing occupancy, regular cleaning, and maintenance of your properties. And after that, you also need to deduct all related expenses, namely electricity costs, laundry expenses, staff salaries such as gardeners, cleaners, people who maintain the pool, security guards, and so on, and so on, and so on. In short, all expenses associated with managing your villa must also be deducted. This typically includes not only the obvious costs, but also any additional or incidental expenses that may arise in the course of operating and maintaining the property. Usually, this amounts to about 10, 12, or sometimes a bit more, up to 14% of your villa's revenue. After all these expenses are deducted, you will get your net profit before taxes. In the reports you receive from your management company, usually on a quarterly basis, you can see all the expense items and you can request a breakdown. If, for example, you want to understand exactly how and on what the expenses were spent, your management company is required to provide you with reports down to the receipts, where you can actually verify what the money was spent on. And if your management company efficiently monitors all expenses, keeps your property consistently occupied, and successfully attracts clients at a low cost, you can generally expect a return of around 8 to 10% if you purchase the finished property. And if you bought the property at the pre-sale stage, at the lowest possible price, your return can be up to 12, 14, or sometimes even higher percent. What will happen to real estate prices in 5 to 10 years? If I knew the answer to that question, I'd probably be the richest person in the world. However, it's clear that we can't look into the future and say with 100% certainty what will happen to prices, but what we can do is analyze trends and historical statistics to make an educated guess. And here we can clearly observe that over the past 20 years, real estate prices in Bali have been steadily rising under the influence of several factors. But the main factor is undoubtedly the notably strong growth of tourist traffic and the increasing demand for tourist properties from arriving visitors. On average, historically, each year Bali has received 10 to 20, sometimes even 25% more tourists than the previous year. There was a period during the coronavirus pandemic when, for 2 years, no one could come here at all. However, this was very quickly offset by the recovery period after the coronavirus, when, over the course of 2 years, the growth in tourist arrivals here was outpacing previous rates. It is precisely this increase in tourist flow that drives demand for real estate and as a result pushes property prices up. This has led to the fact that, on average, completed properties in Bali have appreciated by 5 to 10% per year, while land plots in the most sought-after areas have sometimes increased in price by as much as 20 or even 30% per year. The second significant factor influencing property prices in Bali is the overall and steady growth of Indonesia's economy. We are seeing that the demand for real estate in Bali, especially in recent times, is coming not only from foreign tourists, but also from the rapidly growing and increasingly affluent middle and upper class of Indonesian citizens. Indonesia's economy is growing by approximately 4 to 6% per year, the middle class is expanding at a rapid pace, and all these factors also lead to a consistent and constant increase in demand for land and real estate in Bali. And this pushes prices up. Therefore, if we are not specifically talking about the short-term period of just 1 or 2 years, when certain temporary factors or some instances of local oversupply might affect the market and potentially lead to a temporary slowdown in price growth, but instead we consider a much longer period of approximately 5 to 10 years, then larger global macroeconomic factors will inevitably come into play. This broader perspective allows us to make a well-founded and reasonable assumption that, in the long term, these trends will most likely persist, and the growth in real estate prices in Bali will continue steadily under the ongoing influence of these significant global macroeconomic factors. How can I rent out a property if I live in another country? The answer to this question is very simple. You don't really need to worry about it. This will be handled by a management company. It is the management company that will handle marketing, attracting clients through booking platforms, through an agent network, or, as in our case, a significant portion of sales happens directly thanks to our own social media, repeat customers, and a large established client base. All of this allows the established management company to reliably ensure occupancy. At the same time, in addition to occupancy, it is important that the management company also carefully monitors and oversees the technical condition of your property so that the people who stay there ultimately leave positive good reviews on booking platforms and Google Maps, which will also help attract new clients. Your task will be to receive a detailed report once every quarter. Carefully review it, ask any necessary or relevant questions if you have them, wait for and get thorough answers, and then, after that, receive the financial proceeds. What happens to the property at the end of the leasehold term? This is a very important question, and it is directly related to what is specified in your contract. When signing a leasehold agreement, make sure to carefully pay close attention to the specific terms under which it is possible to extend the ownership of the land plot. In well-drafted contracts, this is specified in a separate section. And often, the correct approach is to have a fixed extension period, which can be done at the cost of only the land plot, without taking into account the building that will be constructed on it. Thus, at the end of the leasehold period, which on average is typically about 25 to 30 years, you can then purchase an additional 25 or 30 years. However, you will not have to pay 100% of the cost. In most cases, it will generally be approximately 20 to 30% of the original contract value. As a result, the profitability of your investment will increase significantly. However, this can only be done if this clause is initially included and specified in the contract. And it is also agreed that the extension is calculated only based on the value of the land. Moreover, the land value should be determined according to the average market value of land in that area, based on the assessment of 2 or 3 independent experts, whose selection should also preferably be specified in advance in the contract. Usually 1 expert is appointed by the seller and 1 expert by the buyer. And if there is a 3rd expert, they are brought in by an independent party. For example, a notary who executed the transaction or who is currently working in that area. Can foreigners own property in Bali? The short, quick answer is yes, in general. And it's very simple. In 90% of cases here, the leasehold mechanism is directly and commonly utilized, which allows foreigners to own property in Bali directly as individuals, without the need to set up a legal company. Such agreements are usually limited to a term of 25 to 30 years, with the possibility to extend and increase this period. The second way to own property in Bali is the so-called freehold. How does it differ from leasehold? The difference is that from the outset, your contract immediately secures ownership rights for up to 80 years. That's 30 years of initial ownership, plus a 20-year extension, and another 30 years for certificate renewal. Why then is the freehold mechanism not as popular as leasehold, and why do only about 10% of all transactions in Bali use the freehold scheme? Well, firstly, it's not as economically advantageous, because with leasehold you pay for 30 years up front, and then, only after those 30 years, you can pay for the next period, by which time you've already earned money and can reinvest it. In the case of freehold, you pay for the entire ownership period in advance. As a result, your return on investment decreases. The second point is that, legally, the freehold scheme is a bit more complicated. To do this, you need to set up a local company. This local company must be fairly large and fulfill investment obligations in the Indonesian economy in the amount of at least 10 billion Indonesian rupiah, which is roughly equivalent to $600,000. Therefore, this scheme is more suitable for larger properties. And it is also somewhat more complicated to formalize legally and will require additional support in the future, since the company will need to submit accounting reports regularly and report on its activities. What documents need to be prepared for the purchase, and what should you pay attention to before the transaction? Real estate transactions in Indonesia are handled by government-appointed notaries. If we are talking about signing a leasehold agreement, it is officially formalized as a so-called Solemnant Act legal document, which is prepared by a government notary and then kept in the archive. This document serves as the main proof of your ownership rights. To ensure that the transaction is as safe and secure as possible, we strongly recommend that you order a due diligence procedure or a detailed transaction check from the same government notary. This is a standard procedure, and it usually includes checks based on several key criteria. First and foremost, this is the ownership right on the basis of which the transaction will be concluded. Second, it is the absence of any encumbrances, the absence of any legal disputes regarding the plot, no outstanding tax debts, verification of whether the plot is actually intended for development, and so on and so forth. In other words, it's a whole set, a range of criteria and parameters by which the notary checks the legitimacy of the transaction and prepares a report for you in which they provide their specific conclusion. They either recommend the transaction or identify certain risks. If, from a risk perspective, the transaction is considered safe, then you either personally or through your representative by power of attorney sign the contract with the notary and receive this very document, the Solemnant Act, which serves as the main proof that you own this property for the duration of your leasehold. What guarantees are there that I won't lose my money, and how are investors' rights protected in Bali? This is a very important and valid question. To avoid losing money on investments in Bali, we strongly recommend that you take the selection of your investment project very seriously. Don't hesitate to spend time on due diligence and a thorough check. Request the official documents for the land plot. Make absolutely sure that construction is legally permitted on this particular land plot. Ensure that there are no encumbrances, restrictions, or any additional factors that could later result in the land plot being contested or disputed. Also request a formal document confirming that the developer has already fully paid for this land plot and possesses the legal right to implement the project on it. After that, be sure to pay attention to who the developer of the project is. Of course, to minimize your risks, it is preferable that the developer has sufficient experience implementing projects in Bali, has already completed several projects, and that these projects are successfully rented out and generate returns for their investors. And so that the developer's experience and reputation allow you to conclude that this is not a fly-by-night company and that the risk of investing in such projects are minimal. After that, as a mandatory and essential third step, carefully and thoroughly review all of the official documents and contracts you will be signing, because it is precisely in these documents that all the specific clauses and detailed provisions regarding the developer's liability in case of delays, penalties, as well as all mechanisms for possible contract termination if the developer fails to fulfill their obligations should be specified. By following the points listed above, you will help ensure the safety of your investments. Which area is best to invest in? There are as many answers to this question as there are areas in Bali, because undoubtedly in every area, whether it is already developed or is only expected to attract tourists in the future, there is usually some interesting investment case. Somewhere an airport has been announced, somewhere else a new marina is planned, in another place an amusement park is in the works, and elsewhere there will be a Formula One track. And all these projects, which in one way or another will eventually be implemented over time, will undoubtedly and unquestionably increase the investment appeal of each of these areas. However, when it comes to our company's strategy, we consistently adhere to a policy of investing specifically in those areas that have already demonstrated proven profitability, that already have sufficient, reliable, and solid rental statistics and data, and that allow us to build and develop predictable financial models and to fully understand what kind of returns we can expect from a particular project once it is implemented in a given region or, in particular, in a specific area. Therefore, in our case, we choose those areas where 80% of tourist demand is currently concentrated. These are areas such as Canggu, as well as the nearby Berawa district and the developing areas to the north, like Pererenan. Also, over the past couple of years, we have seen a steadily growing interest from investors in the south of the island and the Bukit Peninsula. And in this direction, we also see areas such as, for example, Nusa Dua, where five-star hotels have historically been built, where there is already a well-established high-quality infrastructure, and where a large number of high-spending tourists come every year. And that is why we have also chosen this direction as a strategic one for further development. How will the construction of the second airport affect real estate prices? Which areas will increase in price after the opening? Well, undoubtedly, after the opening of the second airport, the areas located nearby should be the first to see a rise in prices. But here you need to be a bit cautious because news about the opening of the second airport has been circulating in Bali for more than 10 years already. And during this time, the project has been launched, put on hold, and the location of the airport has been changed quite a few times. That's why our company's strategy is, first and foremost, to wait until the actual construction of this airport truly begins. And in fact, after that, it will also take quite a long time, perhaps even longer than expected, before any suitable infrastructure for tourists with high spending and high expectations eventually becomes available in these areas when significant projects start to emerge. This usually takes more than a year or two. It can take up to 3, 5, or even more years in some situations. That's why we stick to the strategy of waiting for confirmed growth, to see real increased interest from tourists in a given area, and only then do we consider investment opportunities in those areas. What is the demand for rentals in the low season, and does occupancy decrease? In this regard, Bali is quite a unique place. We're fortunate in that during the winter months, tourists often come here from Europe, as well as from China, South Korea, and Singapore. And in the summer season, tourists from Australia actively come here, since it's actually winter there at that time. Because of this, there aren't any significant or notable seasonal fluctuations here throughout the year. Of course, there is a rise in demand from around May to the end of September, when Australian tourists come here in large numbers. Additionally, there is also a significant surge in demand during the New Year holidays. If we talk about the periods when demand is a bit lower, it's usually the couple of weeks before the New Year holidays and the couple of weeks after, when tourists either haven't arrived yet and are still planning their trip or have already finished their vacation and left. However, overall, the fluctuations in occupancy on the island are not that significant, and this is probably what sets Bali apart from many other tourist destinations in the world. Why is it better to invest in Bali rather than, for example, in Dubai or Europe? Here, I can only share my own personal experience and perspective, because, of course, there are certainly many interesting and unique cases in both Dubai and Europe where you can invest well and potentially earn good returns. However, based on my own direct experience and what I have observed over time, the level of profitability that currently exists in Bali still cannot be surpassed or matched by any other location in the world at this moment. And if we're not talking about isolated cases, but rather about the average typical situation on the market as a whole, then the level of rental yield in real estate, which is usually calculated in double-digit percentages, is extremely rare worldwide, and Bali stands out significantly among other locations and is considered to be the most attractive. Whether this trend will persist into the future, well, only time will tell. However, undoubtedly, as long as the impressive growth of tourist flow here is measured in double-digit percentages each year, as long as the overall trend of infrastructure development continues, and as long as there are substantial and significant investments from the government to make Bali a more comfortable place for, again, higher spending tourists, we expect this positive dynamic to persist. This is also supported by the fact that the amount of land available for development in Bali is quite limited, and with the recent trend of the government gradually tightening regulations, we will likely see fewer and fewer projects being launched on plots of land that are not officially designated for construction. Accordingly, the shortage of land plots will become even more pronounced, which should further support the continued growth of investment attractiveness of real estate in Bali. How quickly can I resell a property if needed? The answer to this question depends very much on what kind of property we are specifically talking about, because of course, properties with a lower price tag sell faster. If we are talking about a large villa with an approximate price of $500,000 to $600,000 or more, the exposure period for selling such properties will, of course, be longer. Of course, it will also depend on whether you want to sell at market price or perhaps even a bit above market price and are willing to wait a little longer. Or, if you need to speed up the sale, you can do so by offering a discount below the current market price and by providing even deeper discounts to the buyer. In my experience, the process of reselling can often take anywhere from about 3 months to as long as half a year. Alternatively, if you're not in a hurry and would prefer to sell for a truly excellent price, we have seen examples where people have listed the property at a price where they would not regret letting it go, should a buyer eventually come along. They patiently waited a year, sometimes a year and a half, but when such a buyer eventually came along, they made a very high profit and parted with the property quite easily, perhaps to reinvest that money into a new property later on. What if I want to use the property for my own vacation? How long can I stay there, and how does that affect the income? In our projects, you can live there as long as you want. We have no restrictions. We don't require you, for example, to only stay in the property for 2 weeks and then rent it out for the rest of the time. If you wish, you can live there the whole year. Naturally, during the period when you are living in the property, if the complex has a pooled income system, your property does not participate in the income distribution since it is not being rented out and does not generate income for the pool. After you decide, for instance, to stop living in the property and return it to the income pool, it will then start bringing you exactly the same returns as it did before you chose to live there. Is it worth investing if I don't plan to live in Bali? Does it make sense to consider this purely as an investment? In fact, that's actually exactly what happens in probably about 95% of cases, almost always with our buyers and investors. It's very rare for people to buy real estate in Bali with the intention of moving here completely and living here permanently. There are indeed such buyer investors, but the majority of people see this as a property intended for partial temporary residence and for renting out the property during the rest of the time. Bali has a very dynamic and well-established active rental property market. Most of the real estate being built here is primarily aimed at short-term and sometimes medium and long-term tourists. And this is precisely the very core of the real estate market in Bali. Therefore, if you are seriously considering purchasing solely for investment purposes, the Bali property market is actually the optimal and most advantageous choice for you. How do you choose a developer and what should you pay attention to? Since buying real estate is without a doubt a high-ticket purchase, and it's not a transaction you typically make several times a year. In fact, for most people, it's often a very serious and significant life decision that can have long-lasting effects. I think it's extremely important to stick to the principle of reliability over promises here. First and foremost, I would pay very close attention to those developers who consistently offer greater reliability. But how can you check and make sure that a developer is reliable? First of all, I would carefully look at how long the developer has actually been operating and conducting business in the Bali market. If it's not just 1, 2, or 3 years, but already quite a long period of time, this clearly indicates that the developer is here for the long term and genuinely plans to continue developing and expanding their business, specifically in the Bali market. Accordingly, the developer's business development plans are also directly tied to Bali, and your investment will be reliably protected in the long run. You should carefully look at the number of completed projects by this developer and, if possible, even personally visit these properties yourself to see and feel them firsthand. Maybe even stay there for a couple of days to personally experience the exceptional quality you will ultimately receive. It's also important to pay close attention to the developer's overall reputation and investor reviews. Ask the developer to give you the opportunity to talk to some of their previous or current investors. Maybe arrange a Zoom call, preferably more than one, so you can directly ask questions to those who have already invested in the developer's projects. This way, you can more thoroughly determine whether you should also join these investors, or if there are any doubts or issues that you should discuss further. And since we are specifically talking about investment real estate, it is important to pay attention to how the developer's management company operates, as well as to carefully consider the reviews and feedback on Airbnb and Google about the developer's properties. And does this property actually generate the financial returns you truly expect? Request detailed reports on occupancy rates and overall profitability, and carefully analyze whether these figures genuinely match the stated promises. Take your time to review all the information thoroughly, so you can make a more informed and confident decision regarding your investment. Which types of properties are the most attractive? Villas, townhouses, or apartments? The answer to this question depends on your investment strategy. Historically, in Bali, larger properties have often consistently yielded higher returns in terms of rental investment income. This is primarily because, for example, a 4-bedroom villa typically costs about 20% more to build than a comparable 3-bedroom villa. However, the revenue generated from such a villa increases by approximately 25%, and sometimes even as much as 30% more. Since when you increase the number of bedrooms, you still have roughly the same pool, the same territory, and the same living room, for example. The return on investment, expressed as a percentage, is higher for larger properties than for smaller ones. However, if we are talking about liquidity and the ability to resell quickly, then, of course, properties with a lower price tag are easier to resell and it's easier to find a buyer in a shorter period of time. Therefore, if liquidity and the ability to resell quickly are important factors to you, and if you find that you can't afford to wait a long time for your buyer to appear or to use your own funds to cover the waiting period, then you might want to choose properties that have a lower price tag and significantly greater liquidity overall. What taxes and fees should you take into account? When purchasing real estate, you do not pay any taxes. All taxes are paid by the seller. However, you should always keep in mind that, for the official notarization of the transaction, the notary public will charge you a fee, which is a mandatory payment set by the government authorities here in Indonesia, and this fee amounts to exactly 1% of the total transaction value. Later, when you are reselling the property in the future, it will matter whether you are considered a tax resident of Indonesia or not. If you do not have a registered tax identification number, the tax rate that will be applied upon the sale of the property will be 20% of the sale price. However, if you do have such a tax identification number, this amount is halved and will be 10% of the final sale price. What is important to check before buying? Well, as we mentioned above, first and foremost, pay attention to the legal clarity of the transaction. Request all the necessary and relevant documents for the land plot, as well as all required and pertinent documents related to the building permit. Ensure that construction is indeed allowed on this particular plot of land. Also, ensure that the building footprint complies with regulations. All required standards and regulations for landscaping, the availability of parking spaces and so on, as well as the total number of square meters permitted for construction on this plot must fully match those declared and specifically specified by the state authorities. Since the regulatory norms that have always existed in Indonesia are now being enforced more and more strictly by the government, there are increasingly frequent inspections of projects. Therefore, to protect yourself from potential issues in the future, make sure that the project fully complies with all of the building regulations and requirements designated for this particular plot of land. What are the options for purchasing? Most often there are two options. Either you purchase a finished property, or you purchase a property at the pre-sale or construction stage, typically. What are the advantages of each option and how do you choose? Here, everything is directly related to your strategy for balancing risk and return. If we are talking about a finished property, then your risks are undoubtedly minimal, provided that a proper legal check has been carried out. Here the property is already built, and you can see for yourself the quality of the property. You can touch it with your hands, look at it with your own eyes, and actually see what materials have been used. You can also get your own user experience and understand how people will feel in this property. And most importantly, you don't have to wait. The property is already ready and is already generating rental income. You can request detailed reports on this rental income for your records and see exactly how much income you will be receiving in the near future as well. The downside of this method is, of course, that the price of such properties has already increased during the construction period, and the return on such investments will naturally be lower. This brings us to the advantages and benefits of the second type, purchasing off-plan or during the construction stage of a development. Because here, of course, you will generally get a price that is noticeably lower than that of a completed property. And during the construction period, which can be 1 year, 1.5 years, or even up to 2 years, depending on how large and complex the project is, the price increase can reach up to 25, 30, or sometimes even 35% compared to the original price. Therefore, in order to decide for yourself whether to buy a completed property or a project at the off-plan stage, you need to carefully determine for yourself whether you want to completely eliminate all possible risks related to construction delays or discrepancies between the stated and actual quality, or if you prioritize profitability above all else. In this situation, if you do choose to focus on profitability, you should simply make sure that the developer you choose to enter the construction project with is truly reliable and trustworthy. Then, the risks we've discussed, such as delays, unfinished construction, and poor quality, will be minimized to the greatest extent possible, allowing you to proceed with greater confidence and peace of mind. How does the presence of infrastructure near the property affect profitability? Undoubtedly, it has a direct impact. If we're talking about where tourists prefer to go, who will in fact be the main driver of your profitability, then any tourist will certainly want to have a pleasant place nearby to have breakfast, a good restaurant for dinner, an excellent spa to relax and enjoy massages, access to a gym if they're staying for a longer period, and perhaps if they need to take a business call or join a Zoom meeting, the opportunity to do so in a nice co-working space. Tourists with children will want to have the option to leave their kids in a playroom somewhere, so the children are occupied while the parents explore the island. In general, all the amenities and services that tourists expect and want to have, such as shops, restaurants, and entertainment venues, should preferably be within easy walking distance. And here, there can be two possible scenarios. Either all these facilities are already located in the area where the project is being built. For example, if we're talking specifically about the area of Canggu, there will be around 20, 30, or even as many as 40 different cafes and restaurants, some of the very top-rated ones, all within comfortable walking distance of your project. In this situation, the need to create a large-scale infrastructure within the project itself is generally not critical. However, if we're talking about a project that is located somewhere more remote, for example in a developing area where there simply isn't enough external infrastructure available yet, then it's definitely important to pay close attention to exactly what infrastructure is already included within the complex itself. And in that case, it's preferable for the complex to provide all the necessary amenities on its territory: restaurants, cafes, spas, co-working spaces, gyms, and so on. Otherwise, tourists might simply be somewhat reluctant or hesitant to leave positive reviews about their stay, or might not want to visit such a complex at all. These were the 20 questions for the developer. I hope this information was useful for you. Of course, we couldn't cover every possible question that might come up, so please do not hesitate to feel absolutely free to reach out to us at any time, leave comments, or contact our experts. They will be happy to answer any of the questions mentioned above in more detail, as well as any additional questions you may have. This was Nikita Shelementsev, founder of the company BREIG. Good luck to everyone, goodbye, and successful investments.